So let's take the conversation forward. We have Mr. Revankar joining in. Mr. Revankar, great to have you on. The market's just breathing a sigh of relief because you've delivered great growth, almost 17% AUM growth, with improving asset quality and a fall in credit costs. The market doesn't get to hear this too often these days. So therefore, the stock is trending higher. But tell us, how confident are you that these trends on improving asset quality, your credit cost has come down to below 2%. You've guided for 2% this year. It's already down to below 2%. Will this continue? Are you confident of not meeting any stress? Because, some people are saying, for instance, MSME, pockets are showing stress. But you tell us what you're picking up from the ground.
Yeah, thank you. Good morning. Basically, you are right. See, for us, the rural and semi-urban are the largest market for us. And the last 6 months, if you look at the recovery in the rural, it has been excellent. Especially the Rabi crop has been the highest ever. And the rural economy has definitely got help because of the Rabi crop and also the MSP price announced by the government. And added to that, good monsoon, an indication that rural economy is continuously likely to grow because of the good monsoon. That also is helping. So overall, the rural and semi-urban markets are really doing good, and that's really helping us in the credit quality, especially. And I think that will lead to credit growth also.
So, sir, since you've had such a strong start to the year, fantastic Q1, why not increase your guidance? I think your guidance is 15% loan book growth this year, right? And credit cost guidance 2%.
Yeah.
Do you think you can outperform your own targets?
See, we always strive to outperform our target, but we keep our guidance for longer time. We don't want to change it in the first quarter itself. Let us see after second quarter how it is shaped up. Because that's very important, because we also will get output, the Kharif output in September. That will also give us a positive indication. And inflation being low, people have some surplus money with them. That also is an advantage.
Okay, on credit cost, can you just explain to us whether we can extrapolate these good trends from Q1? Your credit cost has come down. Our colleague Gaurav, who tracks the company, tells us that calculated credit cost is already down below 2%. So can you give us the exact numbers and tell us whether this kind of performance can be extrapolated into the future as well on asset quality and on credit cost?
No, it is difficult to extrapolate for a longer time because it keeps changing. Right now, we are happy with the rural recovery, and that's really helping us. But generally, if you look at our company over the last 10 to 12 years, we have been maintaining credit cost around 2%. So that will remain at range bound plus or minus 20 basis point. And we're happy with the current quarter's performance.
Okay, so credit cost, 2% guidance, plus minus 20 bips. Got that. That's quite helpful, sir. And you're retaining your loan book growth guidance at 15% for now.
Yes.
This issue of margin compression, and I understand, that I think you carried some excess liquidity, which is why margins fell more than expected this quarter. Just run us through how cost of funds is moving, because again, you're confident that margins will revive to 8.5% by the end of the year. Just tell us what the factors at play are in terms of your cost of funds and how the book is shaping up.
Yeah, the incremental cost is coming down. The book cost for us is around 8.85. The incremental borrowing cost is around 8.34. So that is really helping. And also, we have reduced the deposit interest rate with effect from August 1st week. That also will bring down our retail deposit cost. So overall, we are expecting around 30 to 40 basis point reduction in our borrowing cost, incremental borrowing cost. That should help us to increase our margin.
This fall in the borrowing cost, 30 to 40 basis points, this will show up in Q2?
Yeah, marginally it will show up in Q2. Okay. Over the period, it will inch up throughout the year.
All right. And Mr. Revankar, for the year itself, you're guiding for around 8.5%, right?
Yeah, now we are saying 8.5 will reach by year end, but however we may surprise positively on that.
All right. So gradual improvement in NIMs from year on till quarter four. And by quarter four, you'll be at around 8.5%.
Yeah.
So we've got a few numbers out of there. NIMs moving to around 8.5%. Credit cost should be in that vicinity of around 2% plus minus 20 bips. What about ROA? I think it's currently at around 2.7, 2.75. You're saying that heads to around 3%. Tell us what are the levers in store, and
Yeah.
are you confident you get there?
Yeah, we are confident that we'll get back to 3%. We are working on our OPEX cost and the credit cost. Both will help us in improving the ROA to 3%.
Sir, to talk about the first quarter issue, which impacted your margins, I believe you were carrying excess liquidity to the extent of almost 27,000 crores in the book. So what gives you the confidence of deploying this? Where is growth coming in? Give us some color as well on which segments are, really firing up for you. What will play out? What will make you get to this 15% growth this year?
See, one of the biggest credit demand which we had slowed down in the last 2 quarters was the infrastructure. I believe infrastructure will come back and the credit demand will grow there very fast, because moment the infrastructure demand goes up, then the bulk means the big vehicles and the construction equipment demand will go up. That will definitely help us. And the rural anyhow is doing well, and further increase in credit growth I'm seeing. So second quarter is very crucial for us. I believe post the August 15th, many of the new infrastructure activity will start commencing, and that will create additional demand, and hopefully that we'll be able to deploy our excess liquidity.
Sir, I come back to the asset quality question because we've already given the credit cost guidance. But on asset quality, are you reasonably sure that, stress is well contained? Like I said, some lenders that we speak to, they're talking about pockets of MSME where there is stress. And also for you, your gold book declined year on year. And I think their stage 2 assets have increased. So can you just tell us specifically on gold if there is any concern? Any other asset quality concern in any other sectors?
Gold, there is no concern because the credit cost is almost zero in gold, because gold value keeps going up. The stage 1 and stage 2 movement in the gold has no relevance for credit cost. So there is no surprise there at all. So because normally the interest is paid on settlement, and some people delay. That could be the only reason for some movement. Otherwise, there is no. MSME, there are some pockets where there were challenges in the third quarter of the previous financial year. But I think it is now addressed. I don't really see a big challenge in the MSME. But the cash flow mismatches for small business people will continue to remain. We are basically lending to the service and trading community, especially shops and small businesses. We don't lend to manufacturing. So we don't have much fluctuation in MSME.
In MSME. Yeah. So on that point, sorry, I just wanted to, CV you said is doing very well for you. There's no concern on asset quality. Kotak Mahindra Bank cited retail CV stress as one of the major reasons why their credit costs have gone up and asset quality issues have cropped up. Are you seeing anything on the retail side of CV?
No, we don't really see, because see, the business model, ours is different from that of a bank. We have a one-to-one relationship with each of our customer. So we do have that kind of access to the customer. So we do manage whenever there are challenges. We do manage, and we also regulate the collection by either visiting the customer or even sometimes taking back the asset. So this helps in controlling the retail portfolio.
All right, Mr. Revankar, good speaking with you, sir. Thank you very much. So another good quarter. And I think that winning streak continues. If I were to it's unfair to look at quarter, but that's, you've got to do that as well. But it's been a fantastic run. Thank you very much.